You mentioned the kind of crisis pandemic last year on March 2020, and it was an interesting moment for a lot of reasons. We had Michael Saylor on here about a month ago, and that was the moment where he kind of said, well, wait a second, maybe I shouldn't have cash. Maybe I'm not a responsible CEO if I'm sitting on cash. Maybe it should be something else because I'm starting to see maybe what, inflation really is as opposed to what's probably published in the indexes, et cetera. And he kind of went a deep dive. We all kind of thought this was the black swan event we had been waiting for, and then quickly realized maybe it wasn't. We also saw a lot of easing, a lot of money being printed, a lot of assets being propped up. Sounds like you, within 2 weeks, kind of changed your mind and got back in the market. What can people learn with what happened there? What do you say to people about understanding inflation or even the whole quantitative easing or even the value of their dollar versus a crypto asset?
Yeah, the main thing to stress is what's happened in the last 15 months in monetary stimulus is literally off the charts. In June of last year, the United States started printing more money in a month than they did in the first 200 years of the country's existence. It's just completely off the charts. So you kind of have to open your mind up and just think what's going to happen when you print that much money. It has to inflate the price of things whose quantity can't be eased. And that is what's happening, that anything that has a fixed quantity is going up in value. We did put a graphic in our investor letter and on Twitter that shows the price of things essentially inverted. So it's really actually the price of the dollar priced in number of ounces of gold or grams of sugar or bales of cotton. And in my opinion, that's really the thing that's moving. All the rest of that stuff is kind of staying the same relative to each other. It's the value of paper money that's plummeting right now. And so you see that against everything. We even put lumber in there, everything that you can't just kind of make more of instantaneously is going up in value, and the value of paper money is going down. And it feels like we're accelerating. The amount of monetary stimulus that's coming we just keep dialing it up. And the numbers are pretty staggering. For each of the last 2 fiscal years, the budget deficit is $14,000 per adult in the United States. I mean, that's a lot of money, right? And then to put it in perspective, the cost of a vaccine dose is $14. So we're spending 1,000 times the value of a bit of medicine that would actually stop the virus, kind of papering over the impacts of the virus. So, it really is staggering amounts of money that are being printed, and it has to impact things. And the best proof of that would be that in a global pandemic, when corporate earnings were being destroyed, the S&P hit a high. That's excess money. Like that's and there's all these great stories of like Hertz raising money when they're in bankruptcy because there's so much money being shoved at it. There's just a lot of paper money going around, and it really has to cause inflation. And you quoted Milton Friedman earlier. His great line: "Inflation is always and everywhere a monetary phenomenon." It might not be true for like plastic flip-flops or whatever, but for things whose quantity can't be eased, like housing. Housing is record increase in the median home price in the United States in a depression. It's really wild, right? So there's just so much money being printed that it really is pushing up the price of all assets.
And so, again, I had this conversation with my 17-year-old daughter here in the studio on Friday, and she's never owned crypto. She doesn't take economics courses, but Dan, she said, okay, but who's going to pay? That's what she said. She's like, who's going to pay for all this? And I couldn't really answer her question. So I guess I'm going to ask you, we all see this. We all see it happening. Obviously, smart money is diverting itself into non-inflationary vehicles like Bitcoin and some crypto assets. But how does the party end? Where are the chairs when the music stops, in your opinion?
Yeah, so if you want all kinds of analogs, there's a great line by the former chairman of the Fed, Chesney Martin, that said, the role of the Fed is like a chaperone at a party to take the punch bowl away right when it's heating up. And I feel like the monetary authorities are like an F1 driver spraying champagne on the crowd right now. Like, there's so much money getting out there that it really is creating excess. And who pays for it? It's a really good question. Unfortunately, I think the answer is it's groups that are subsets of society, like renters. 63% or so of Americans own a home, flooding the markets with money, driving mortgages down to 1.25%. Massively positive for people who own a home. It's horrible for the 38% of Americans who don't. So there's a huge transfer of wealth going from renters to homeowners. Same thing with net worth. The United States just printed record net worth, household net worth, but it's not evenly distributed. It's for people who own equities, people who own homes, people who own businesses, and for those that don't, this is a huge transfer of wealth. So, well, it kind of feels like your daughter might say, well, who's going to pay for it? I mean, I think that's the answer. It's the people who are not in the typically majority groups, homeowners, people who own equities, either directly or indirectly through their pension plan. Those are the people that are benefiting from this. And the people who are not in those groups are being disadvantaged.
Yeah, it's really down to the kind of the lower income or even maybe lower educated that haven't crossed that gap of owning assets, which is, they don't teach this in school. They don't teach you how to buy assets in school. I never knew how to do that or what that might mean. In the UK, we paid furlough checks to people, which was to supplement their income for many months, and maybe even it's coming up on a year. And I remember someone was like, well, who's going to pay for that? Well, you're going to pay for it through your taxes, through the devaluation of your currency, but you're probably going to pay double what we gave you ultimately. And the asset holders and the other people won't pay. And that's the strange thing about this paradox is it almost redistributes wealth while we're doing this.
Oh, it does. No, and unfortunately, I think that's going to be the subject of some really fascinating studies over the next 4 or 5 years, is the massive wealth redistribution because of the monetary and fiscal policies that have just been implemented.